Is sales tax avoidance ethical for SaaS businesses? Imagine running a software company that helps other businesses manage their finances. Now picture the complex world of sales tax that comes with selling software across different states and countries. It might seem tempting to find ways around paying sales tax, but is that the right choice? Let's explore what the facts say about this tricky topic. Sales tax avoidance means intentionally not collecting or paying sales tax when you're legally supposed to. For SaaS companies, this can happen if they ignore rules about where they have to collect taxes. These rules depend on something called nexus, which is a connection between the business and a state. Nexus can be based on physical presence like an office or employee, or on economic activity like sales volume or transaction numbers. If a SaaS business reaches these thresholds, it must register for sales tax in that state and start collecting it. The laws around sales tax for SaaS are different from place to place. Some states treat SaaS as a taxable service, while others do not. Sourcing rules also vary, meaning the location of the seller or buyer can determine if tax applies. Businesses need to stay updated on these rules, which can change often. They should perform nexus studies to identify where they have tax obligations and analyze which products or services are taxable. Applying exemptions correctly is also essential to avoid overcharging or undercharging sales tax. Failing to comply with sales tax laws can lead to serious consequences. Tax authorities may conduct audits, demand back taxes, impose penalties, and even pursue criminal charges if they find deliberate evasion. Besides financial penalties, a company's reputation can suffer if it is seen as avoiding taxes. This can impact future business deals, mergers, or acquisitions. Using specialized tax and compliance software can make managing sales tax much easier. These tools automatically calculate the right rates, track thresholds, and prepare filings for multiple jurisdictions. They reduce errors and help ensure the business remains compliant. Ignoring sales tax obligations or trying to avoid them is risky and illegal. The short-term savings are not worth the potential long-term costs. From an ethical standpoint, paying sales tax supports public services and infrastructure that everyone benefits from. Responsible SaaS companies understand that following tax laws is part of being a good business citizen. Using finance software solutions to handle sales tax shows a commitment to transparency and legal compliance. It's about doing the right thing while protecting your business from penalties and damage. In the end, avoiding sales tax is not an ethical choice for SaaS businesses. It involves knowingly breaking the law, which can lead to severe penalties and harm your reputation. Instead, companies should use reliable tax and compliance tools to manage their obligations properly. Staying compliant helps build trust with customers and authorities alike, ensuring your business grows on a solid and honest foundation.